Okay, welcome back to the channel, team. Thanks for tuning into another video. Today's video is going to be a Bitcoin update. We're going to be taking a look at the total cryptocurrency market cap, Bitcoin dominance, and the DXY to talk about where we think the price will be heading on the short term. If you have any questions, leave them in the comments below. Remember to like and subscribe to the channel. You can find our links to our Twitter and our Telegram in the links below. I highly recommend joining those. Let's dive right in. So Bitcoin has come down and touched the bottom trending support line. What I said would be the last support or the last glimmer of hope that Bitcoin has to kind of bounce here. We've come directly down and retouched that trend line just in the last hour or so. So the scope of today's video is going to be, are we going to bounce from this level here, or can we expect an immediate crash? So we're going to go ahead and look at the Bitcoin dominance chart. I just want you to remember what this chart looks like, identify where the price is, and just remember it's right on this trend line. So we're going back to the Bitcoin dominance chart. And the Bitcoin dominance chart shows the strength of Bitcoin in relation to other assets in the cryptocurrency. And as Bitcoin dominance rises, we generally see Bitcoin, taking the lion's share of the market capitalization or a total cryptocurrency market cap. The issue is where the market is in a downtrend. So cryptocurrencies are dropping, including Bitcoin and altcoins, and then you have Bitcoin dominance rising. It shows a situation where altcoins are kind of getting hammered, or they're kind of getting bled out or drained of funds. So what we're seeing here is we're seeing a bit of a resistance. And usually when we see a resistance in the Bitcoin currency, the Bitcoin dominance chart, we see a little bit of relief for altcoins. So this could be indicating a potential move upwards is coming. Obviously, if we get rejected from here again back into this range, we can expect a little bit of relief for the market. We can expect altcoins to see a little bit of a rally, and we can expect Bitcoin to maybe bounce from this range to retest 39,000. We do have to keep in mind the total cryptocurrency market cap is come down and retest this lower support line, breaking out of this descending, or should I say ascending wedge. Remember, we had an ascending wedge, guys. We were talking about it up over here. We got rejected, retested, and we've come down exactly as we told you guys will happen. But now we're at this support line. So once again, this is quite a major support line for the ascending, total cryptocurrency market cap, as it does signify basically the last major support line on the chart before we go into a bit of a free fall mode. This whole range here, we can definitely just free fall it all the way down to about 1.25, 1.3 trillion if we lose this level. So we are kind of on the edge of a cliff in a metaphorical sense for Bitcoin. We don't really have a lot of movement room here if we want to be bullish. And as soon as we lose this trend line, the bullish scenario becomes even that more unattainable. Right now, we do have hope for bulls. There is a chance we can bounce upwards, but it is getting quite slim. So we're going to quickly dive into this chart and talk about what is happening. So as you can see on the 1 hour, we have a descending wedge. Now a descending wedge is inherently a bullish formation in the sense that it is a downtrend, of course. The trend is heading down with two declining resistance lines, but it converges at the end where we have a usual breakout to the top side and reversal. That is still definitely a possibility for this chart. I do not want to write that off yet, and I think as long as we remain within this pattern, within this ascending channel, there is definitely a chance we have some sort of reversal here. And it's no coincidence that the 100-day moving average is moving along this trend line perfectly. So we've said already, guys, and we'll say it again, for us to become bullish again, we do need to break above the 100 moving average. If the price can get over the 100 moving average, bounce around over here, reclaim this level, that would be the trigger. All right, if we can reclaim this level here, we can expect a move back close to the top of the wedge. Okay? We are not macro bullish though until we break the 200-day moving average. The 200-day moving average is still remaining at this resistance zone here. If we can break above the 200-day moving average, then we can expect a move up to 53,000. Until that happens, guys, do not expect the market to pump. Don't be too bullish. Just remain cautious and don't invest too much money. I would say right now it would be a perfect opportunity to grab some altcoins and scalp some trades. The reason being is Bitcoin is definitely very low, but we have a very clear invalidation zone. Meaning, if you enter on Bitcoin now, you're only risking a few percent, 1 to 1.5%, if that, before you have validation. But your potential profits on this one can be anywhere between 6, to 12%, depending on where the price heads. So I think right now is a perfect entry point for Bitcoin. I don't think right now is a good long-term entry for Bitcoin. And I don't think right now is a safe entry for Bitcoin. But I think if we're taking a look at the risk reward or the possibility of a bounce, then it is potentially a good entry. In saying that, as soon as we lose this level, guys, it's completely invalidated and we think the price is going to continue downwards. I wanted to quickly introduce my new favorite exchange, Bitget. Bitget is a non-KYC exchange, which is particularly beneficial for members in the UK and Australia who are limited by certain trade restrictions. Bitget has 250 plus spot trading pairs, as well as 60 plus leverage trading pairs, up to 125x leverage. Sign up now in the link in the description using our referral code to get up to $153 in rewards for completing 4 separate tasks. Let's go ahead and dive back into the video. So let's go ahead and take a look at the DXY real quickly. And the DXY, we did a whole extended video on it, I think yesterday. And we talked a lot about, I'm just going to zoom out, I'm going to show you. We talked a lot about this process here. So we talked a lot about how government printing money and increasing interest rates can affect, oh, we missed out this whole section here, can affect taxpayers and obviously how it affects on-risk assets and companies. Just to give a brief overview, and if, of course, if you've already watched this, go ahead and skip forward. I'm going to put the timestamps in the links in the description. But we're going to explain it again for new viewers. So obviously the government has been printing a lot of money lately. They've been lending a lot of money, obviously accumulating a lot of debt. When you have debt, you get interest, all right? There's interest always to be repaid on debt. So who pays off that principal? Who pays off the interest? Well, it's taxpayers. You pay in this period, pay off the principal on the loan, and the next period you pay off the interest on that loan. So the government is funding a $100 million project and they want to fund it this year. They will take out a debt or a loan of 100 million. You're paying the interest on that loan and the principal on that loan within the next few periods. So a $100 million payment that you should originally pay as a taxpayer, collectively, becomes now 110 or 105 million. So now taxpayers are paying more for the same development. So this is called funding economic growth through debt. Right now, the government is funding economic growth through inflation. What they're doing is they're printing so much money. It increases inflation by decreasing buying power. What does that mean? Well, it means your dollar has less value. Couple that with interest rates rising, because remember, interest rates rising is going to counteract the rising inflation. It's going to reverse the process. It equals lower dollar value in the sense that your buying power is less, but now you have a situation where interest on debt starts rising as interest rates rise. So what does that mean? It means your dollars are worth less, cost of goods increase, you have to pay more interest. Well, obviously that puts you in a situation where you have less money, so less cash flow. And that's for retail, that's for companies, that's for everyone. Everyone has less money. So particularly when we're looking at risk assets, we want to focus on companies, because institutions are what drive, government and institutions are what drive markets primarily. Retail has an effect, but not a huge effect, in the sense that retail can't move the market as much as it is institutions and companies, unless it is a global phenomenon like Dogecoin, where every second person put their money into it. But in a standardized market, if we look at a general market or a general asset, most movements come from insiders or institutions. So previous to the last few months, interest rates have been all-time lows. Right? We're talking like 20-year lows or something. What does that mean? It means you can accumulate debt very cheap. Debt is incredibly cheap. So these companies have been buying up a lot of assets, a lot of risk assets, property. All right, we're talking residential property, we're talking shares, we're talking securities, and we're talking cryptocurrency. So risk assets for very, very cheap, right? In the sense that they can take a loan out and buy that with a very low interest repayment on those loans. And companies notoriously purchase risk assets through debt. A lot of companies fund through debt because their cash flow statements state their value of their company is based off future earnings. So they fund through debt and purchase through debt, their future earnings increase, regardless of the fact that the debt to equity ratio is altered. So what is happening now? These companies have accumulated a lot of risk assets and a lot of debt, and now the interest rates are starting to rise. So they have two choices. They can use more cash flow to pay off their interest, or they can reduce their balance sheets, sell their assets, increase positive cash flow and make their companies not only look more fruitful, but also have less expenditure in the terms of interest. Obviously, they go for that second option. They start selling off-risk assets. And this is why cryptocurrency has been dropping. This is why stocks have been dropping, all right? And we've told you for months that this is going to happen. And it really isn't even rocket science at this point. We look at the stock market in the last few weeks and we're really seeing we're starting to see the effect of it. It is absolutely tanking. Cryptocurrency, holding up quite well, but still dropping. And we can go ahead and look at the DXY now. So the DXY is essentially the strength of the US dollar in comparison to other assets, and it has broken out of a 21-year long symmetrical triangle. 21-year long symmetrical triangle. Do not underestimate what this means for the DXY. Now, the DXY, you can't use traditional technical analysis in the sense to predict where the price is going to go, because it is, well, not manipulated, but it is controlled by a lot of other things besides just market psychology, which most technical analysis is controlled by. A lot of global events or news events can really impact the DXY's price movements quite rapidly. But if we had to take a standardized market analysis on where we would expect the price to go to based on the measured move, we can apply the distance here to the breakout point, and we can expect this to go up to anywhere around 147. All right, 147 on the DXY is the maximum target we can expect this to go to based on the breakout of the measured move. Do I think that's going to happen? Possibly. Look what happened here. COVID, well, 1840. Was it 1985? Went to 167. Even in early 2000s, 121. COVID crash. We're above the COVID crash. All right, keep that in mind. We are now officially above the COVID crash. So I think we could definitely continue upwards. I do think we have to remain cautious, and I don't think you should be using that analysis, as set in stone. It's more or less take it with a grain of salt, because you can't really use those precise measured moves on a chart like this. You can only really predict direction, not really strength. So we predicted that we were going to break upwards. We predicted the direction correctly, but it's hard to predict exactly where it's going to go. So let's go ahead and take a look back at the Bitcoin chart real quickly and talk about what would happen if we lost this trend line. So we're going to do that, and then we're going to go through the analysis, and we're going to do some technicals of a chart. So if we lost this trend line, guys, we would expect obviously a pretty significant crash back downwards. There's two ways we can come up with a prediction. First one is taking a measured move from the apex to the base, and we don't worry about wicks. So we're not going to worry about these bottom wicks, we'll worry about the top wicks, copy and paste that over, apply it to this point here, and we have a minimum of 14,000. All right, and if we apply it to the base of this move, this breakout, we have about 12,500. All right, so that is the lowest we think Bitcoin will go. That is absolute worst case scenario. Do I think that is going to happen? No, that is not my prediction. Do I think it's possible? It really just relies on a few things, and we're going to talk about that now. So let's go ahead, leave this chart up. We're going to go ahead and bring up a different chart. We'll bring up our Brave New Coin Liquid Index. And no, that is the wrong one. And a lot of people who have been watching my videos have probably seen this many times, but this is essentially the prediction we made way back in November. And we said that, this is the prediction here. And I'm going to quickly bring it up on screen. Let me just go ahead and show you so you can see the default chart. Here it is. I don't know, you can probably see that on the screen now here. So we made this one a while ago, and it's kind of followed that perfectly. But the logic behind this one is that the 200-day moving average, we'll go to a 7-day chart, is going to continue at the same trajectory that it has in the last 34-day bar period. So that would lead us to about 24,000. The price decreasing should end up around 24,000. That was our theory, that the price will come down and retest the 200-day moving average as it has in the past. Now, this is where it gets a little bit hairy, because the market structure is suggesting the price is going to come down to 12,000, 12,500, right around over here. So what would happen? What would that mean for Bitcoin? Because that would be the first time we would ever, in the history of the Bitcoin, well, besides here, which didn't really do much, would be losing that 200-day moving average on the 7-day chart. this will completely reverse the uptrend Bitcoin has been in for the last, 10 years. And I think that's something to definitely note. I don't think you should be worried about it yet, but I think it's something you should definitely be aware about. If we do lose that 24,000 range and close, quite low below it and don't really bounce back up it within about a 2-week period, we can expect this market to drop even further. And taking into consideration of global events and the state of the global economy, it is definitely not an unrealistic expectation. But in the sense that if that does happen, I'd be quite concerned for cryptocurrency as a whole. So let's go ahead and take a look at our bullish scenarios. This is our bullish scenarios. Of course, Bitcoin is also forming a descending channel. Now, we already know a descending channel is a bullish formation. We have retest points and we have confirmation points. I'm going to go ahead and draw those in now. So our retest, where is my circle? Here it is. Our retest points are as followed. Confirmation points at the bottom over here, and obviously a retest point here. So this chart is essentially telling us, look, every time we get in this range here, we want to be looking to sell. Every time we get in this range here, we want to be looking to buy. That is essentially what it's saying. So can we come back down and retest this lower range? It is quite unlikely that we will come back down and retest this lower range again. I think 2 tests is about it. We usually have 2 tests on one side and 3 tests on another side, meaning that we are most likely to actually retest this upper range at some point again, rather than coming down and retesting this bottom range. What does that mean for Bitcoin? Well, the upper range is sitting at around 39,000 to 41,000. So if we go back and look at Bitcoin chart, 39,000 is sitting around at this black line and 41,000 is sitting at this gray box. That is not a coincidence, guys. There's absolutely no coincidence in that. There's suggesting that from here, there's a chance we're going to bounce back into this range before getting rejected again. All right. I believe that is what we should expect. I think we should expect a small bounce from here before moving down. Would I be putting my life on the line for it? No, I don't really care too much about the short-term price direction. I don't really care too much for short-term price fluctuations right now. I'm much more interested in the macro. What is the price next week compared to now? Simple as that. Am I trading these swings? I am trading these swings. I am short-term scalping. Will I be looking for altcoin entries? Yes. Will I be looking for possible points of reversal? Yes. I'm not a bear. I'm not a bull. I trade the trend. It is as simple as that. All right. So looking at the Bitcoin chart right now, guys, just to reiterate what we're talking about in a different format, the same thing we said before. If we get above the 200-day moving average, I'm going to bring it up on the daily, which is over here. We can expect a push upwards to 50K or higher. For that to happen, we do need to break above the 100-day moving average. The 100-day moving average is sitting between this range, indicating that if we book it past 42,000 to 42,500, we can expect a move back up to 48K. Until then, guys, we are still going to find resistance at around 39,000 to this black line, 49,000, which is represented by this part. I'm going to show you this part here, indicating that we're going to see another significant crash if we lose that level. And if we lose our lower support at 34,000, we can expect our drop down to 24,000. So if you have any questions about today's video, guys, leave them down in the comments. I hope this explained something and summed it up. Just a quick summary. Right now, Bitcoin has seen a significant drop in the last few hours. Looking for short-term scalp entries now would not be a bad idea, but be very careful. You need to have a very tight risk, should I say very, very tight stop loss, very small risk, very small amount to invest. This is a very dangerous place to be buying Bitcoin. Going off historical data, we do expect to see a bounce here, all right? I don't think this bounce will be a prolonged bounce. I think at max we'll get into this range here before we get rejected. But we have talked about our possibility to flip bullish over here. Obviously moving past the 100-day moving average, breaking into this range, pushing upwards, finding some support over here, and obviously pushing upwards would be a bullish case scenario. Until then, very much bearish, very much a downtrend. Be very careful. Don't overextend your position. So guys, we're going to quickly introduce our Crypto Academy. Our Crypto Academy is launching in about 15 days. Absolutely insane. A little bit over 2 weeks. Be sure to check it out. You can join our Telegram for that one, or you can just contact us if you want more information at cryptoacademycourses@gmail.com. We'll send you all the payment information and the course structure. We have about, I think it was 450 plus slides, 85 videos, 20 worksheets. We have 50 hours of content here, guys. We teach you everything from basic technical analysis to market patterns, candlesticks, technical indicators, and how to use these in conjunction with each other, and more importantly, how to use advanced risk management and how to find trades for yourself. So if you're interested in that, contact us via that email, cryptoacademycourses@gmail.com, and we'll catch you in the next video.